Hello everyone, my name is Marcello Kolax and today we are going to have a look at European energy markets for the week starting the 24th of July 2023. So let's jump right into it. We have the TTF front month right in front of us. We are on the weekly chart and we can see, zooming out, that we are still retracing lower, and we've been doing this since August 2022, and this entire big downtrend is very much contained inside this orange channel. And just for you to know, so this was the preceding up leg starting in 2020, and we have retraced nearly 2/3 of this up leg, which is by textbook the standard retracement. And now we are in a really interesting phase. Zooming in, we can see that for quite some time we haven't really hit the lower end of the channel anymore. Also, we do see that the moving average convergence divergence, the MACD, has been pulling higher. So this in itself is a sign of bearish weakness. It is not a signal, it is nothing to trade on, it is just something to look at, that bearish enthusiasm has slowed down significantly since we first started in August 2022. So now we are in a really exciting phase because people, zooming in onto the daily chart, the traders that I do talk to on a daily basis, everyone is really watching out for the upper boundary of this channel because we ended last week with a slim-bodied and long-wicked candle, which in itself is showing some indecision at this upper channel boundary. We do see that the stochastic gave a bullish signal, and we still have much room to grow before we even move into overbought territory. So this in itself would suggest some strength. On the other hand, a trend is in place until it's not, and we are still in a downtrend, also in a near-term downtrend. So, and that is reflected in the MACD, which is still well below its zero line, as we can see here. Although it is pulling higher a little bit, no clear signal has been given yet. So, what happens next? We are still printing lower peaks and lower troughs, which is a sign for the bears. So the near-term bear market is just still in place, but you're wondering what's happening here. Okay, so TA or fundamental analysis as well, nobody can predict what the markets are going to do, but TA helps us to react to the markets as soon as something interesting happens. So here's the thing. I believe that if we push above, 30.89, which is a very important resistance level that I pointed out last week, if we push above this level, then yes, I do believe that we would go to 32, and if we go above 32, I think we could nearly hit the 40. However, if we do open soft on Monday, then I do believe that overall we would continue the near-term downtrend. And then probably we would be swinging lower, lower, lower. What will happen, I cannot say. So that's why it's important at the start of this week to place your stops at levels where you would be comfortable to either jump on an uptrend or on a downtrend. Let's have a quick look at the NBP, where more or less the same thing is happening, but slightly differently. Also, here's a good chance for us to zoom out and have a look at the weekly chart. We can see that the market has retraced around half to 2/3 to the preceding uptrend that also started in May 2020. We've been going lower, and the mid-term downtrend is in place within this orange channel. Also here, we do see that the MACD started to pull higher, even though we are still in this downtrend. So that is a little bit worrying for the bears. I would like to have a look at the DMI, the Directional Movement Index, which I like very much. So green above red simply means the bulls are in charge, and then if red is above green, that means the bears are in charge. The white line is called the ADX, the Average Directional Index, and below 20, you can see we are at 10. Below 20, that means the market is not trending anymore. It's rather prone for a sideways move, and there's not much enthusiasm left in the market. And that's exactly the case, right? So we are neither the bulls nor the bears, so you can see this flip-flopping here on the weekly chart, means that nobody really is in charge. The MACD is pulling higher, even though we are still in this downtrend. So the market is resisting to move lower. One thing on the TTF that I forgot to say, exactly the same here, right? So I believe that if we start maybe in the midterms swinging in this range, for the TTF it's 22.5 and 40, and on the NBP it is more the 52 and the 100 and that range. Yeah, if we bounce higher here, then yeah, I would probably go for a little bit of midterm neutrality. Not still quite yet, because we are still in a downtrend, but there is a chance for the market to push sideways. This can take months and months. So, midterm downtrend is in place until it's not. However, we do see some divergence. Okay, let's have a look on the NBP on the daily market. So here, exactly the same thing. We are well below the 200-day exponential moving average. We are within the descending channel. Okay, the MACD is still bearish, but pulling a little bit higher, but still bearish overall, which is in line with the lower highs and lower lows and the market swinging lower. So we are in a near-term downtrend. However, we do see that the stochastic, one of the good oscillators that I use all the time, has given a bullish signal on last Tuesday, and we still have room to grow before we even move into overbought territory. So here once again, I do not dare to predict what is going to happen, because this is a very tricky phase, but I think it is fair to say that the bulls will continue as soon as we close above 78.15, which is this old support level that's now turning into resistance. Yeah, above this level easily we could make it to 97, and then probably the 100 as a little bit more of a round number / psychologically important level. If, however, we do start a little bit softer early this week, maybe, what is this, below 68, I believe then there's a case to be made for the near-term downtrend to continue. Of course, you want to see a break below this low here, 58.5, in order for the market to swing lower and lower and lower. But once again, at this, it's a tricky point. So yeah, be mindful of your stop placement. Not directly, of course, on any support or resistance levels, yeah, but marginally beyond this. This is not trading advice. It's just general purpose / textbook behavior that a trader might deploy. Okay, let's have a look at Brent. Brent has been doing nothing for way too long, but now things are getting interesting. Okay, let's have a quick look here. So this is the Brent weekly chart. We do see, zooming out, what is this? COVID. April 2020 moved higher until May 2022, and of course since then we have been moving lower. We did move sideways out of this downtrend channel quite some time ago, and I'm even eager, I'll do it live here on the show, to just remove this downtrend channel, because I wonder how much value there still is in having this graphical on here. So I'm just removing this for now. So, and we are very clearly in a sideways trend. So longer term, it's somewhere above here in the 90 range and the 88s something, in the high 80s, and of course the very low end is in the 70s. We can see we have shifted lower once, and now we shifted higher again, but the mid-term sideways trend is in place, I believe, until we are moving beyond this range here. We did break above the 200 weak exponential moving average, which is good for the near term. For the midterm, not also meaningful until we break above this. I believe that overall we are still more likely to push higher. Why is that? Because once again, same thing here. We do see that the stochastic still has room to grow before even moving into overbought territory. We also see that even though the market is going sideways, MACD has been growing gradually higher, so this is a good sign for eventual bullish resolution. And we do see that overall enthusiasm for a direction in general has been slowing, but we are still well above 20. Yeah, so the market is still trending, and you can see that the bears, although still in charge, they are somewhat losing momentum. Let's have a look onto the daily chart. Okay, so here my near-term outlook is clearly bullish towards 87.49, 0.5, which is, as you remember, the midterm chart's upper boundary. Why do I believe that? Well, we did break above this tight range that has been in place since May 2023. We did break higher. And of course, we did resist a little bit at the 200-day exponential moving average. Very normal. But support did hold at this old upper range boundary. So what does that mean? I mean, from a psychological perspective, that simply means that the people or the traders that maybe had a bullish inclination but didn't really jump on the uptrend first time around, they were thinking, it's maybe a function of greed. They say, okay, you know what, I missed this great breakout here. I do believe the market will move higher. So on the pullback, the next time we are down here, I will actually buy. And that happened, right? So you missed it, the market moved high, you go, oh man, I wish I would have bought, and then you have a second chance to buy. And now this could push the market higher. So that's why overall, I do believe, also considering the MACD pushing higher, this is a very gradual, very sustainable pace. Yeah, we do have this pullback just below this 200-day exponential moving average. So this is healthy, so it's not some unreasonable spike. I think this base here will have the potential to push higher towards at least the 87. Zooming out for you to see what's happening actually in the grand scheme of things. So I do believe that this here is very reasonable for the market to move higher. If we had to push above this, then probably we would have to start talking about the midterm outlook also turning bullish, but that is something for the next couple of weeks and months. For now, midterm neutrality with, I mean, depending on where your midterm ends, for me it's between 1 and 3 months. Yeah, so still sideways, but near term definitely higher. Let's have a look at coal. Okay, so coal has been quite interesting. Zooming out onto the weekly chart, we can see that this uptrend from 2020 boom has been retracing. Also, we are like 2/3 down, which is the textbook retracement, what the markets usually do. We see that the 200-week EMA has been flatlining, but gradually tilting lower, as it is expected. Okay, do you see a similarity between what's happening on coal and what's happening on the TTF for NBP? Yeah, more or less the same thing, right? So of course our analysis is more or less the same, although tools are a little bit more bullish. So we do have on the weekly chart market moving lower within the channel. Okay, we do have the MACD pulling higher. All right, so but in addition to that, we do have a bullish engulfing, this pattern here. Yeah, didn't quite happen on the TTF or the NBP, but we did have a very clear 2-candle bullish pattern here, which is why my bullish outlook is a little bit more pronounced on the midterm. So I do believe that there is a chance for the market to turn midterm from bearish to neutral above what is 122.5, yeah, which would be above the peak, the preceding peak, and above the channel, and I would turn midterm bullish as soon as we were to push above the 200-week exponential moving average, which at the moment is at 154. But once again, the trend is in place until it's not. So for now, we are still bearish. but there's a good chance of bullishness. Let's have a look on the daily chart. Okay, so daily call, what is happening here? So you can see the orange channel is just a midterm channel, and within this channel we could draw an even more accurate channel that has helped to, guide price since January. And we did break higher, and although we ended, I mean, it was a very gappy week, yeah, which usually is a sign of either really strong enthusiasm for the direction or due to just a lack of liquidity. So which one is it? Well, a little bit of both. So we did have 1, 2, 3 green Marabuzos. Marabuzo means a green candle without any wick. So we can see that buying only stopped because the session ended, not because there was no more buying interest. Yeah. So we did start out strong, and you can see the last the next 3 sessions were on low volume, even below average. So overall, this year seems fairly unsustainable. However, overall, with the tools all aligning for bullish direction, I wonder if it's possible for us to actually push towards or even above the midterm channel, because we are already above this. Okay, so call is a little bit iffy because the tools show bullishness, because the market has been rising so much, but it doesn't take into account, and that's where you need an actual analyst and can't just automate things with tools, right? We do see that our low volume is low, it's a bit gappy, seems unsustainable, so there's equally a chance of the market pushing lower again, where we have this very important previous support level that once broken turned into resistance, and now we are back here. So I truly believe that 120 will be a very important level. So above it, clearly to 138, and below it we would probably very quickly head lower to 93 again. But let's see. Okay, let's look at carbon. We do have on the weekly chart, we are in this very long uptrend that goes back to 2017, yeah, so that remains unchallenged for now. And for the midterm, we do have, let me remove the volume, for the midterm we do have this ascending triangle. So by textbook, ascending triangles are usually resolved to the upside, but this is first of all carbon's first major ascending triangle. So we'll see how the market reacts to that. Also, in the European energy markets in general, these large patterns have a tendency to just fizzle out to the side. What do I mean by this? So the market is pushed into an increasingly tighter range. Then eventually, I've seen this on the TTF quite a lot, on the NBP. I've seen this German power, where the market doesn't break higher, as per textbook, but simply like fizzles out to the side for quite some time. So I have seen this a lot of times. So I wonder what's going to happen here. Per textbook, higher, and per experience, sideways. So let's have a quick look. In these sort of sideways markets, please do not look at moving averages and tools that are based on moving averages. This includes MACD, Bollinger Bands, moving averages outright, and also not so much the DMI, because you can see bullish, bearish. You'd be thrown in and out of positions all the time without making any progress. If you would take every bullish and bearish signal, you would enter the market more or less where you would exit the market where you entered it previously. So there's not too much with that. In these markets, it's good to look at oscillators, because they can help you to better time these swings. Yeah? So you can still turn a profit if you're a prop trader within those ranges. So weekly outlook for now, neutral, as long as you're within the ascending triangle. There's a chance for the market to break higher, but this isn't always guaranteed. Let's have a look at the daily chart. Okay, so you can see, zooming out, that within the midterm triangle, we do have a near-term downtrend. Yeah, this here. We did have a very strong week last week. We have 1, 2, 3, 4, 5. 6.5, 7. We have more than a week of green candles here in front of us. And overall, yeah, of course, this is reflected in the tools, which are strongly bullish now. I just wonder how sustainable this is. So yes, we did break above this old sideways range, and this should now offer some support. Overall, I think it would make sense for the market to maybe take a little bit of a breath before pushing higher, but overall I do believe that the direction is still higher. So I do think that we could see 96 and then maybe we go to 100, where also the upper triangle boundary resides. And of course 100, as you can see here, has been this magic number that has been attempted in Feb 22 and again in August 22 and now in February 23 and maybe now again. So near term bearish. There is a case, although this up leg here is I would call this very near term bullish. Yeah, so this might make more sense on the hourly chart, but on daily chart we are still bearish until we break above this. I would go neutral above the channel and probably yeah, then not sure I would go bearish at 96 if we then stopped out at 100. I'm not sure I would do that either. Yeah, but this is a very interesting period here to see what's going to happen. All right, let's have a look at JKM. So JKM, I'm looking at NYMEX for now. Let me know if you want me to switch to ICE. I think I'll do that at some point soon. So here, because this it's just an assessment, right? So we are switching to the line chart, and what we can see here on the weekly chart is that the zooming out fully, there you go. Okay, so zooming out fully, we can see that from the start of 2020 we moved higher until August 2022. Classic have retraced around 2/3. Is this 2/3? Let's have a quick look. Between 50%, 2/3, somewhere there. We have retraced lower, and the market did push sideways out of the descending channel. So that's why my JKM outlook for now is neutral, and I remain neutral between 9.24 and what is this, 12.24. So which is exactly this peak and this trough. Yeah. And I would turn probably bullish towards 18.86 or the 200 week EMA as soon as we make it above R1, which also then would mean we are making a first higher high and a first higher low. Let's have a look onto the daily chart. I do believe that, looking at the tools, we are first probably headed lower just a little bit. Remember, overall I do believe that we are going higher, but maybe for the next couple of sessions there is a chance for the market to push lower. Why do I think that? I think that because the MACD is pushing lower. We did get a bearish signal on the MACD. However, we don't have much happening on the DMI. ADX is still above 22, but above 20, but steadily declining. So overall, it's all a little bit boring. But below 10.56, I do strongly believe that we could make lower lows and probably scrape along the resolved channel boundary, the upper channel boundary, right? It's this midterm channel. But looking at the weekly chart, yes, there is a chance to ultimately maybe push higher eventually. So JKM in summary, we moved from midterm bearish in the channel to midterm neutral within this range, 9.24 and 12.24. In the near term, I do see some losses, especially early this week if we push below 10.56. Yeah, then it could scrape lower, but ultimately the idea is to maybe test the upper end again. We are still bearish even on the daily chart a little bit because we are still below the 200-day EMA. Henry Hub. Okay, so for Henry Hub we can go back to the candlesticks, and we do see on the weekly chart that we are bearish. We are very bearish below this tentative descending trend line. Yeah, we are making lower lows and lower highs, and we have been doing so as also since August 2022, right? We are from 2020, boom, uptrend, now lower. This was steep, yeah, very, very steep, but we are retracing a little bit higher. As long as we are below the 200-week exponential moving average and below the mid-term trend line, we are bearish. Although, as you can see, same case as with the TTF, we do see some bullish divergence on the MACD, which in itself would suggest that the bears are running out of steam, which is what we see here on the daily chart. Also here you can see that overall bearish gusto is leaving the market because we are now at 17 with the ADX. So yeah, the bears are not really in control anymore. What does that mean for the near term? So we can see that zooming in, the market has been in the near term swinging higher and very nicely and very predictably within this orange channel that we just saw on the weekly chart as well. We do see a bearish harami here in the towards the end of last week, and we do see a little bit of a hinging stochastic. So maybe there's a chance for the market to push lower a little bit at the start of this week, but as long as we are still making as long as we are not breaking below this trough, yeah, the tendency is still higher ultimately. But to be honest, even if we were to break lower, as long as the channel holds, there is still, for me at least, the idea of the market moving higher ultimately. So as you can see, I'm trying to keep it simple here, yeah, and that's one of the very basic TA principles. An uptrend is higher highs and higher lows. But for now, we haven't made a higher high for quite some time. Yeah. So in the very near term, so something that you'd probably see on the intraday charts, I would call it a very near term sideways trend. Yeah. But overall, as long as we are still in the channel, near term, I would say bullish. And that's sometimes where the confusion comes in. I'll stop here very quickly. So when you talk to your colleagues or to anyone else in the industry and you discuss the outlooks and people talk about near-term, mid-term and all that, make sure that you and your colleagues have the same understanding. So for me, the very near term is anything you see on the intraday chart, probably on the hourly chart, and you can look maybe 3 days to a week ahead. Yeah. And so in the very near term, we are kind of sideways. Near term for me is around like 3 weeks. Yeah, so that's why we have like these broader swings. And mid-term for me is between 1 and 3 months. And then of course the long term, yeah, is months and months, years, even, I would say. So there we are. Weaker open, and if we bounce off here, there's a chance for the market to continue very near-term sideways, but if we break higher, ultimately I believe we could definitely challenge this midterm trend line. Okay, how about currencies? Let's have a look at euro dollar. Looking on the weekly chart, we zoom out and we see we have this long-term downtrend that has been in place since 2008. So over the past 16 years, this upper boundary has been tested once, twice, 3 times, 4 times, 5 times, and now a 6th time. We did move above the 200-week exponential moving average. Boom, looks good. But now the channel here, once again, is the critical moment for us. I wonder, genuinely. So overall, if history is any guidance, which it is, it's the only guidance we have, it would make sense for the market to push lower eventually. But I also do see the chance for a little bit of gains. So we can see the MACD doesn't push higher, so we don't make new highs on the MACD, although the market has been making new highs. So overall, that shows that maybe the market is a little bit running out of steam. The mid-term bull market, also this red candle isn't really encouraging. So although we broke higher, overall the idea is probably for the market to move lower eventually in the midterm. Let's have a look on to the daily chart. Okay, so I'm a little bit more optimistic on the daily chart because we are above the 200 day exponential moving average, this yellow line, and it has been offering support quite nicely. And just now we did break above this resistance zone, which is now offering support. And we do see that some of the tools are hinging a little bit. So we did get a bearish signal on stochastic, and yes, MACD doesn't look all so good anymore. But I wonder, yeah. So overall, I do believe that if this support area here holds, yeah, if we get support like somewhere here or here or here, then ultimately we can still bounce higher. But then once again, we would be testing this midterm channel, which is very tricky to do, right? If, however, we were to fully break below this old resistance level that now offers support, if you would break below here, then I do not think that upside can be maintained, and then probably we would be challenging the 200-day exponential moving average. So once again, I'm not trying to be too daring here because this is a very sensitive level. I really want to see either 1.11 or 1.13 fail in order to make a directional decision. And that's what TA is all about, right? It tells us at what point would we be content with our direction, at what point would we be more secure in our directional assessment. Let's have a look at Euro Pound. Let's start at the weekly chart. Zooming out. So in the very long term, so you can see 2003, 7, 11, we haven't really pushed higher above 0.93 maybe for quite some time. But in the midterm anyway, we are in a downtrend. Just in May, we pushed below the 200-week exponential moving average. We now try to push above this, but it doesn't really quite work out for now. We do see, however, that the stochastic is giving a bullish signal. Okay, so that's a sign for the bulls, for a little swing higher, but not the direction. Yeah. Then we do see the MACD still well below the zero line, so that is in line with this descending channel. And we do see there's a little bit of a maybe bullish crossover on the DMI. So it's very much a mixed picture, right? And when you zoom in onto the daily chart, that makes more sense. But for now, the midterm downtrend remains in place as long as we are in this descending channel. On the daily chart, however, zooming out a little bit, we do see that we are in this tight channel that has been that we broke into that in late May. We have been swinging higher and lower, and you can see we do have two very small bodied long wicked candle at a very important resistance area where we have this old support level that now offers resistance, and we do have the 200-day exponential moving average, and we do see a little bit of hinging on. So hinging means we are not really pulling higher anymore, it's more like a little bit sideways on the stochastic. So I wonder really what is going to happen here. I do think overall the direction is still lower, continuing the sideways trend. If we were to break higher, however, I do see that we could easily take 0.87 and then probably go to 88. But this remains to be seen. Once again, some sensible stop placement is encouraged. What some people might do, maybe put one just below this range of last Friday, and the other one I would be a little bit more careful actually, and before I go bullish I would like to see the support turned resistance level to actually break. Let's have a look at pound dollar weekly chart. Okay, so we are at an important level here. So you can see, zooming out, we are on this really long downtrend that's also been in place since 2007, through 2008 to 2007, and we tested it like once, twice, third time, and now a fourth time, right? And midterm is bullish in accordance with this ginormous up leg, yeah, which goes back to September 2022. However, So in accordance with the methodology, the uptrend is in place until it's not, and we haven't broken below yet, and we haven't made a new lower low yet. But for those who try to be a little bit more precise, a little bit earlier in the markets, I would see that this red candle undoing everything from the preceding week, plus a bearish signal on the stochastic. I would see this as probably as a somewhat of a bearish signal. I do, however, appreciate, of course, you do see that as well, that yes, overall the MACD still pulls higher, which means the momentum is still there with the bulls. So I wonder if we were to break below this level, if ultimately we could still push higher like this, because as long as any sort of like correction bottoms out above 1.23, which is the trough, we would still ultimately pull higher. But this would be a historic event, because then we would really be going above this long-term downtrend channel. And I don't really see that happening. So overall, I do believe that probably we'll break lower, probably approach this, and then we'll see what happens if we push lower than 1.18 is in the cards. But it is more something for the near-term trend. So let's have a look here. So overall, of course, as well, we are in a near-term uptrend, and the near-term uptrend remains in place until it isn't. You must be sick of hearing this from me by now, but truly, this prevents us from making silly trading mistakes. So taking it slow, okay? So this old resistance level, as soon as you push through, is now offering support, and we have this little spinning top from last Friday. However, we do see that, yes, we did get a stochastic bearish signal, and we did get a preliminary bearish signal on MACD. It's not below the zero line yet. Only this crossover. I'm not really taking this as a bearish signal, to be honest. And of course, since the market is coming down, we do see the DMI. There's a little bit of a probably crossover happening at some point soon. However, overall, I do believe actually that we might see a break lower. And if we do, then we'll probably testing, as we could see on the weekly chart as well. We would probably start approaching the first trough, which is 1.26 on the daily chart. And I think that a break is more likely. However, until it happens, it's irrelevant. Okay, so once again, I would probably, this is not trading advice, but some people might put a stop below this trend channel here, trend line. Cool, and that is it. That's the week starting 24th of July. I hope you enjoyed that. This was a very long video, nearly 40 minutes. Let me know if you made it to the end. You can follow me on LinkedIn, send me a connection request, or just follow me where I publish daily outlooks for European energy markets. Until then, thank you very much, and bye-bye.